This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with your closing grain and livestock comments for May 8th, 2017. Corn market down 4 to 5 today. Soybeans down 6 to 8. Wheat market down 8 to 9 in Chicago. Minneapolis down 8 to 9. Kansas City down 4 to 5. Kind of a day here, a little bit of risk off. Weather conditions look to be improving. We're looking at circumstances here where we do have some rain here for Missouri, Illinois, and Indiana over the next 2-3 days. But then things look to dry up in both the 6 to 10 and 8 to 14 day models with above average temperatures. Couple that with a little bit of fun covering last week and liquidation to today, and we still have this back and forth market where we're not accomplishing much but find ourselves stuck within a range. So we do have a USDA crop report coming up here on Wednesday. That's going to be very important as we lay out the first complete new crop S&Ds. Market's going to be very much in tune with what the demand numbers are, where USDA starts trendline yield, and then obviously the carryout levels, which we kind of forecast to be around for new crop 2 billion bushels in corn and around 600 million in soybeans. That bean number is still a scary one longer term, but we'll see just how well we can hold on here with some of these numbers flying around. The corn number would obviously be a year-to-year reduction on carryout levels if we'd come in around that area, but off of less acres and trend line, it should be pretty close. So we'll see what that says on Wednesday. That's really going to set the stage for direction along with weather, but right now weather looking to improve in many areas and a lot of progress here in the northern plains over the last few days. In the cattle markets today, feeder cattle up anywhere from 3 to 550 today. Big move there in feeder cattle after a limit down day on Friday. The cattle market up anywhere from down in the fronts to up nearly 250 in the deferreds. So another day where we see the cattle market snap back here a bit. Obviously had Thursday, Friday down in the cattle markets and then reversal back today. So very important week here. Cash really going to set the tone, but it's tough to get this market to break too far when you've got cash trading at such a premium and you've got the market as current as we are. Something we haven't seen here the last couple of years and why we're seeing a little more bullish enthusiasm. The hog market into resistance counts. That market was up $1 today, but as we find ourselves in the 77, 78 area, I think you're going to run into quite a bit of selling, even despite the strength in the cattle markets. So hogs, 78 to 80, pretty good spot to be marketing in our opinion. Support going to set up still around that $70 to $72 mark, and exports really going to be the key for the hog markets there as well. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation.